Okay, folks, just a quick midweek review. I won't be spending a lot of time on this one. I will be having a price action lesson in this weekend's weekend review. Okay, so just going to cover the real quick majors and anything that I think may be in line for the rest of the week. Expectations are low now. We're going into Thursday, so just be mindful that the bulk of the weekly volume is most likely behind us, with the exception of cable. So we'll see that when we get to it. For a reminder, look at your economic calendar. We have rate announcents for GBP tomorrow. All right, so for dollar index is our daily chart. I do everything fluid today. Usually I do a PowerPoint slide, so that way I can keep my focus, but I'm going to more or less zip through this. For the folks that are brand new to the 2020 group that's coming into the mentorship, this weekend I'm going to have a detailed explanation. Of course, everyone will be able to see that, but I'm targeting the audience that has now just started coming in, because we have a really large group that just joined for 2020. This is their first live going forward review, with the exception of what they saw shared over the weekend before the market started trading. So it'll be insightful. That way you guys can determine what it is that you're supposed to be getting from these reviews and how they apply the information to get the best and most out of it. All right, so we have our SIBI here. So sell side imbalance, buy side inefficiency. I had the eyeball sitting here. That was what we're going to be watching. And the draw on liquidity is up here. Now, I mentioned that it does not need to come up here, but that's where the liquidity is pulling price. This may be all that's necessary to rebalance the dollar index. We just got short of it by, what was it, 4 points today? The high being 98.19, and the low, the candle that frames the high of the sell side imbalance, buy side inefficiency, is 98.23. So yes, 4 points away from filling that in. Now this is enough. It doesn't need to go any higher than this, and this could be rebalanced and done for the week. But we'll see what we get in response to the GBP rate announcement tomorrow. All right, so we can see the hourly chart for dollar. We've had our fair value gap, as I mentioned last week, that we would come back down, reclaim the bullish order block, and start to rally. Consolidated around the 2018 old high. On Friday, we traded up a little bit higher, and then on Monday, we consolidated around the old daily high, the equal highs that we were looking for the buy side liquidity pool. It found some support on there, then rallied up to the bottom of the old BISI on the daily chart. That's what this blue line is, okay? And the top blue line here is the high of the BISI. Go back to your daily chart, and you'll see these respective lines here and what they were. And you can see how price worked off this level, came back, recapitalized, fair value gap. Again, same thing here, rallies away, fair value gap, institutional order flow entry drill, runs to buy side liquidity. Yes, it falls short of what we're looking for, 98.23, but nonetheless, that was our objective for the week, and it's allowed us to see higher prices on dollar, and still could potentially easily see it stab up here tomorrow on the news. Now, one of the things that could happen tomorrow with the rate announcements is that we could see it spike up to, and maybe a little bit through 98.23, and then it can come down rather aggressively and upset some of this in here. And that still would not break the bullishness that could otherwise unfold after that effect. In other words, what we see in GBP is going to be a catalyst for what we go forward. Let's drop down into a 15-minute time frame. Okay, here's our 15-minute time frame for the dollar index. You can see fair value gap in here, came down beautifully, hit that, filled it in, hit the order block, rallied up, came back down inside of the fair value gap that exists on the hourly chart. Institutional entry drill here, rallies up, comes back down, fills in the inefficiency here, and then we have a little bit of a pop. Now I want to see it kind of like hold price in here and then try to make an attempt to get up in there tonight, if not during the rate announcement for GBP tomorrow. Nothing really terribly exciting about this particular time frame. It's just been really obvious looking for it to close in that BISI or daily fair value gap. Let's take a look at the euro dollar now. Okay, so here's our euro dollar daily chart. Right away you should see the market maker sell model. There's our consolidation here, rallies back, comes back, retrace, reaccumulation, reaccumulation, smart money reversal, low risk sell, distribution, redistribution, and now we're approaching the area in here where we want to see the sell side liquidity ran out below these equal lows. And that's the objective we had for here, and the little magnet I put for a icon to draw your attention. That's what we're looking for bias. Okay, so when I have these little magnets on the daily chart, that's kind of like your reminder that that's where we're anticipating the daily ranges to expand in that direction. Okay, try not to get caught up in all the different little direction changes that take place on these 5 and 1 minute charts you guys like to watch now because of what I'd shown in 2019. This is the order block, the actual opening price on this candle. Let's take a look at the open up here. It's right here. The open is 110.20 and 4 pipettes, and that's what this level is here. And you'll see it when I move it away. See the blue? 110.20 and 4 pipettes. This level is going to be salient when we drop down to lower time frames. But I want you to take a look at the BISI in here. So this is the buy side imbalance, sell side inefficiency, fair value gap. We traded through it last week. And then I want you to take a look at how the bodies of the candles stayed below that BISI. And even though we were able to trade up into basically consequent encroachment and rebalance to this old low, on Monday, we still expanded on the downside. I still believe that's where we're likely to go. It might get some carryover into or sympathy play with the GBP tomorrow. We'll see what we get in response to that, obviously. If we doesn't do it tomorrow, as long as we do not trade all the way back up to above this high, then we'll be looking for a continuation into next week for the run on the liquidity over here. All right, so let's drop down into an hourly. All right, so here's our hourly chart on euro dollar, and here's that bullish daily order block, the opening price, and here's the old daily BISI. Look at the sensitivity at the consequent encroachment, at the low of the BISI, the high of the BISI, and we almost hit it right here to the bottom or low end of it, and then it sold off. And every time we create a low, the euro dollar has been coming down, tagging that, hitting it every time it goes down. And this was a late afternoon coming back up, popping into FOMC, rebalancing to the bearish order block. The fair value gap in here gets completely rebalanced right to the pip. The body of the candle stopped dead in its tracks on the old order block. Now, again, this is what you don't get from the free tutorials. Bullish order blocks will act like natural support and resistance. If we trade below, that's why I said when we look at specific reference points of a range, the open, high, low, and close is all you need. But looking at long-term view or higher time frame rather, and breaking it down from a top-down approach into a lower time frame, it will give you a narrative where price is reaching for the draw and liquidity. When we have these specific candles or order blocks, when we get below what would otherwise be, in this instance, a bullish order block, if we go below it, its opening price can act as resistance. You can see the sensitivity here. Trades up through it, hangs around a little bit and goes lower, trades a little bit above it here, relative equal highs, and then goes lower, and then comes up and boom, hammers it right there. Both bodies, the close and the open, on these two particular candles, hourly candles at that, were unable to get through that in the form of the candles' bodies. Yes, tiny little wicks above it, but nothing much to really make a big deal out of. Let's drop down to a 15-minute time frame. Again, looking at the expansion below that order block and reaching down into what could potentially be the target we were looking for that sell side liquidity on the daily chart. Look at the inefficiencies in here in price. We have a fair value gap, comes back up, fills, sells off. Fair value gap comes up, drops lower, order block, rallies back above, buy side liquidity, and returning back to the old fair value gap here. I'm leaving the levels off because I want you to do homework and do this for your own charts. You'll see that the fair value gap in here, extended out in time, hits it again here, sells off, runs up into that old order block opening price on the daily chart at 110.20 and 4 pipettes, hits it, fair value gap in here, fills, one more time, comes back to recapitalize, and then distribution, running the sell side liquidity resting below these relative equal lows, comes back down into 110 big figure, and then comes back up to, runs the equal highs, distribution, redistribution, runs sell side liquidity below here. Then it just gets sloppy in here going into FOMC, and then boom, we get to pop up in here. Perfect run into the old order block opening price on the daily chart again, which is what that blue line is, into a fair value gap as well with a breaker. So the breaker is the low here, the high, we can see the relative equal highs, breaker running those, and that's what we ran back up into with the confluence of that opening price on the daily candle. All right, so we're going to start off with a 15-minute time frame because there's a little bit of details in here that I want to remove as I'm going forward up to the hourly and then the daily chart that I don't want to appear on the daily chart. So we had our weekend review, and I said that ahead, which we were trading at here on the close of Friday, I said that we would not necessarily need to go back up into the breaker and close in any of this up here, but we will be watching this right in here, which is the level we traded here and here. Came back up into it to this point, did not come all the way back up into here, which is not necessary. So we have a return to the low end of the range that creates this consolidation, and a raid breaks down. So our breaker comes in and gets reclaimed again after rebalancing all of this. Buy side liquidity hits that, sells off, fair value gap in here, breaks down on Tuesday right in here. This is the buy side imbalance, sell side inefficiencies, you can see right here, which you'll also very clearly see when we get to the hourly chart. And look at this return back to the consequent encouragement, which is the midpoint of the gap, and then we had resistance towards the end or the low of that BISI. But this right here ended up sweeping all the way down on Tuesday, right below the relative equal lows, which is what I said we would reach for if we get through this buy side imbalance, sell side inefficiency. So it went right to that, and since it's done that, it's been consolidating, which is what you would expect ahead of the rate announcement for GBP. So where are we anticipating, or where am I anticipating price to go to next? I still think that we are likely to come down into and under this low here. So sell side is now here, and the draw is here. So that's what we're looking for relative to the 15-minute time frame. Let's go to the hourly chart. Okay, so here's an hourly chart for British pound. You can see how we've been respecting the buy side imbalance, sell side inefficiency that's seen on the hourly chart. Consequent encouragement, just fell short of consequent encouragement, and we're looking for, or at least I'm looking for rather, a move below these lows in here, and to attack the liquidity resting below these relative equal lows here and this one here. It's probably going to require the assistance of the rate announcement and the fundamental data that's coming out with GBP tomorrow and Thursday's trading. So it can pop up and go back to the top of the BISI, which would be closing in the remaining portion of this fair value gap right there. And it doesn't need to come all the way to the top. It might come right to the low of this candle here at what is that? Moving around too much here. 130.33. Okay, so it might be where we want to reach up to, which will clear out buy side liquidity. But I would expect it to punch up into the top of the BISI, and that would be reasonable. Wouldn't surprise me to see that, and then hopefully get it run down to the sell side liquidity, attacking these two areas here. I want you to look at it and see the buy model here. So we have consolidation, rally, reaccumulation. Nothing really in here to speak of, but we have a smart money reversal, low risk sell with the breaker, redistribution, and we're area right now. This could become another area of distribution that would send us down below these lows. Now, if we trade above this fair value gap right here, okay, if we trade above that, then it's probably going to make an attempt to get higher into this area right here. And this would be the spike area where it would probably go up into on the rate announcement news for GBP. Otherwise, we're looking for the lower end. I'm favoring the lower side, just so you know. I'm just telling you what would break my analysis and where it would likely go if I'm wrong. So that way you're very clear as to what I'm saying, but I am still bearish on GBP. Now, I'm not actively trading it, okay? I don't like the current market structure that's in. It can go technically either way. But I'm telling you because of what I see, what I'm electing to side on. Okay, so I'm electing to see it go lower to run the sell side liquidity out. Okay, let's move on into a daily chart. Okay, so here's the daily chart, and you can see it's just really, really ugly. It's tight, consolidated. It could literally break out either direction, and that's why I'm not terribly excited about this particular pair. But I am obligated to give you my opinion. And that's why I'm telling you that I feel that they're going to try to make an attempt to run the sell side liquidity out. Okay, that's the only thing I'm looking at that has any kind of interest to me, and I'm only basing that on the fact that we went above this old high here, and we had a run that was rejected at the mean threshold of bearish order block that creates this top of this range, and it just makes sense to seek the liquidity resting below these equal lows. And does it go lower than that to attack this low? I'm not in that position to say, yeah, it's likely to happen, because we are still in a large consolidation for GBP, which is, again, why I'm not touching it. It needs to have displacement. It has to have some kind of energetic move on a higher time frame daily. And then once it creates that imbalance after that, then I'll have something that's more meaningful in terms of opinion or analysis for this particular pair. All right, so I want to go over to the crude oil market and finish this video up with that. All right, so all these equal lows here on the oil market, I think that is indicative of further weakness. This was obviously the drone strike on the oil refineries over in the Middle East. And right in here, we have a volume imbalance. Okay, you'll learn about that in the mentorship if you're new. But the market trades up into that and sells off. That was the catalyst, what I was outlining today. Okay, so here's the 15-minute time frame for the crude oil market. This is the March 2020 delivery contract. As you can see here, the H stands for March. Okay, this is our weekly opening gap, and we have relative equal lows. I did not draw attention to that in the public presentation. I think that's where we're going to draw to next. The run in here up to this level here, I'm going to outline that too, but I did not show the fair value gap. I was only electing to go to this high as a buy side liquidity, which pretty much everybody's familiar with, but fair value gaps is kind of like mentorship only, so that's why I kept it outside of the discussion. And let's take a look at the lipstick on this. You can see that we have a fair value gap here. We trade up into that, goes a little bit above it, that's okay. Buy side liquidity pool resting above relative equal highs, and the catalyst was it came all the way back up Monday, Tuesday, and then initially overnight we came real close to running all the way up into the fair value gap here, but we did essentially fill in all this weekly opening gap. So whenever the market opens lower like that, there's a very strong tendency for the market to want to come back up to that and rebalance it. And then what is rebalancing? There's an absence of any kind of candle in here. So where it stopped trading here on this one, it opened here. So there's a big gap. Okay, so basically it's no trading at all in here. So how does it rebalance? It needs to happen like this. Price trades up. Does it completely close it in? No, it leaves a little portion right here. Then it comes back down to it and then rallies again. It completely fills it. So what now would efficiently fill it entirely? Because it's only been offered on the buy side here. It needs to come back down in. So now this whole area here becomes a balanced price range, but it has left relative equal highs, which builds up a pool of liquidity. The crude oil market runs down to the bottom of that weekly opening gap again, and then rallies through, then runs above these relative equal highs to the buy side liquidity, and then rejected. Okay, and breaks down, and now this becomes a breaker, bearish breaker. It trades back up to it, sells off again, comes back up into an old fair value gap. Extend that out in time. You see it hits it right at the bottom here. then sells off again, and then we have a fair value gap right in here. Now, I did my best to try to record this at the time, but because it's administrative season, basically, for payments and such, all of my computers and screens are being used by my help to process everyone, to get everyone in or continue into the next month. So I'm kind of like stuck with just my phone, and it's hard to do that and still be assisting them here when they're helping you all. So I saw a fair value gap right here, and I was waiting for it to come up in here and snap a picture of it with the little camera thing that usually sits on your trading view, so you can screen capture and then share. And I missed the opportunity to do that. The candle had already been down here, so it was nothing I could do. I really want to, like I usually do when I was using MT4, I would do a screen capture as it would go to the order block or it would go into a target level. I missed the opportunity to actually screen grab it as it happened, and I'm looking for this to go down into target 2. And I just want to briefly just cover what these targets are. It's basically the liquidity pool here and fair value gap. That's here, and I have it just a little bit above this low to kind of throw everybody off, and would really just be this order block here. So it's this area here that would be hit as target 1, and then as it runs lower, if it gets that expansion on the downside, it's these relative equal lows here. That's what target 2 is. So it's not Fibonacci based or anything like that. And then the next one would logically be down here, the sell side liquidity pool with these equal lows that are really, really obvious. So I'm looking at it in the sense that it should expand to the downside and not run back above this high. So what I was trying to frame is what a trade setup would look like in this particular commodity as it happened, using what I teach you all in fair value gaps for Forex. So the same thing occurs in commodities and it occurs in stocks as well. So it should not go back above this high. Should it do that, then it could come back up into here, and that could be a sell as well, because that would be a confluence of bearish breaker, fair value gap. And if you've never heard me use that combination before, that in itself is a model. So it can trade back up here to the bottom or below the fair value gap is all that's necessary. It doesn't need to completely fill it. So it can trade back up to there and then go lower. With this type of market structure like we have here, I don't like it like that. If it would have did it from here and then retraced all the way up to it that way, that would have been a better likelihood of the scenario of hitting this gap and then going lower. But because we have this and then it's become choppy, I'm anticipating it, and I might be wrong. Don't get me, misunderstood here. I'm not hard selling this as you should be in this selling. The best move was inside of today, and if we get some rollover, it's just going to be because it's heavy and it's going to be reaching for the sell side liquidity here. And then at a later time, if it gets below here, we'll look for some kind of inefficiency there. So the next draw again, if it gets below target 2, is this area here. So just think of it as that magnet idea. I'm looking for an anticipating price to reach down into these lows. Okay, so it may not do it without running above this high. And again, if it does, if this was a paper trade idea, like you can say, okay, we're going to use this idea as a case study. Okay, now granted, I didn't take the trade, and you can't be in the trade either because it's already moved, but we can say that this is the framework for it. If it for whatever reason runs up through there, then you can study it with this, using this candle's high at, what is it, come on, 53.77. So if it trades at 53.77, that could be a sell, and your stop would have to be above the midpoint of this wick. Okay, or basically we'll use this old high here, and it'll be 54.26. So your sell would be here, and your stop has to be 54.26, which is kind of wide. That would be too much for my personal tastes for crude oil. But every one full dollar move, like from 54.20 to 53.20, that's $1,000 per contract. So we've had over $1,000 move per contract today based on what I outlined on Twitter as it happened. So again, I'm anticipating heaviness on this and an unwillingness to want to go higher to take out this high. It can come back up and and trade back into here a little bit, I'd rather not do that. I would like to see it just get heavy and just roll over and build some momentum attacking the sell side liquidity resting over here. And that, my friends, is going to be it for the midweek review. I will catch up with you by way of Twitter, I'm certain, tomorrow. And then on Saturday, 5 p.m. New York time, EST, that's when you'll have, if not sooner, the weekend edition of the ICT Mentorship commentary. Okay? So until I talk to you tomorrow by way of Twitter, wish good luck and good trading.